Hello friends! In this video, we'll continue from where we left off, where we discussed buy stop and sell stop orders. Today, we're taking one step further to explore two new order types, buy limit and sell limit. So let's get started. Buy limit. This order is used to open a buy position when the price drops below the current market level. In other words, you expect the price to fall first and then bounce back upward. Sell limit. This order is used to open a sell position when the price rises above the current market level. In other words, you expect the price to climb higher and then start moving downward. Example. Let's say gold is at $1,000. You expect it to drop to $950 before heading back up. So you place a buy limit order at $950. When the price reaches that level, your buy trade is automatically triggered. Now, the opposite case, gold is at $1,000 and you expect it to rise to $1,050 before starting to fall. So you set a sell limit order at $1,050. Once the price hits that level, your sell trade is opened. Summary. So far, you've learned about 4 types of pending orders. Buy stop and sell stop. Confirm continuation of the current trend. Buy limit and sell limit. Anticipate a possible trend reversal. By using these tools, you can trade more strategically, manage risks better, and move closer to your financial goals. Remember, learning the right way to trade is always the first step toward success. Stay tuned for the next lesson. Share this video with your fellow traders. And don't forget to subscribe and hit the bell icon so you never miss an update.